Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 28th of September. I hope you all had a great trading week. And if you're new, don't forget to like, subscribe, and share this video content with your fellow colleagues and along your social media. It would help to grow the channel. Thank you very much. And getting into the week ahead. So this is from Trading Economics. A busy week of major economic releases will be headlined by the US employment report. So that's non-farms on Friday, or the first Friday of each month, featuring fresh data for payrolls, unemployment, and wage growth that will impact the policy path for the Fed this year. Other major labor market updates include the ADP employment report, results from the JOLTS and Challenger job cuts. Besides labor updates, investors will also be alert on the risk of a US government shutdown amid the start of the new fiscal year. In Europe, fresh inflation data for the Eurozone and its members are due, in addition to CPI publication by Switzerland. Key leading indicators are also expected stateside in ISM PMIs, coinciding with PMI releases in China and Canada. On the monetary policy front, rate decisions are due in Australia. So a fair few things going on this week. So looking at risk sentiment, and for risk sentiment we tend to look at the VIX, the S&P, gold, and the 2-year yield, although you can swap the 2-year yield out with pretty much any other bond yield. So you can use, for example, the euro yield, you can use the UK gilts, Japanese ones, etc. But looking at the VIX, which is a volatility index, but also an indication of risk sentiment, and so 20 is seen as a line in the sand, so above 20 is seen as more risk off, and risk off would be more safe haven plays, and below 20 is seen as a bit more risk on. And you can see that volatility has picked up over the last week or two, remaining between maybe 1750, somewhere around that 1740s, and of course low volatility around the 14s, around there. And yeah, so that's one confirmation that really the market is more focused on, the return, yield return, or return on investment, and that's kind of backed up as well by the S&P. In a risk-off environment, you would literally have the stock market tend to drop. But you can see this is over the last, I think, 3 months. Yeah, the last 3 months, last quarter, and you can see pretty much, markets trending higher and higher. And that's not to say it's going to continue going higher, but for now it's kind of confirming until certain structures start to maybe break, or maybe a deeper pullback, and that obviously has to be confirmed with some news data. I think for now we are still in the risk on environment, although mentioned earlier in the week ahead from Trading Economics, there is the risk of a US government shutdown. So we could actually see some risk off sentiment start to come into the market if that becomes the narrative. But I think overall, over the medium to long term, they tend to sort those things out, and any pullbacks probably are likely to be buying opportunities on the S&P. But that also coincides with, and I guess I'll get to that a bit later on in the video, rate cuts as well, and how that affects the stock market. So far, we're seeing the S&P and the VIX kind of confirm more of a risk-on environment. Gold, a historical hedge against inflation and safe haven assets, would typically indicate that we are in a bit more of a risk-off environment, as gold is a safe haven asset, and it is a hedge against inflation. But I think with gold, moving higher since, the maybe the end of August, it's more of a function of dollar weakness than any kind of major risk risk off sentiment. So I think as the dollar has weakened, you've seen gold also strengthen. And of course, bond yields, and the 2-year treasury yield is an indication of future interest rate expectations and also as well investor confidence in government debt. But at the moment, the focus really is more on future interest rate expectations, and you're seeing the yield start to rise a bit, and that's due to really kind of dollar strength this week based on decent data, which means that it means, but the it's indicating that the Fed may not cut as much as the market has currently priced in. But again, we'll get to that. So at the moment, I think we're still in that risk off environment. Sorry, risk on environment. I keep saying risk off, risk on environment. Although again, risk off could be triggered. Some risk off sentiment could be triggered by the government, potential government, US government shutdown. So looking at the US dollar index, and the US dollar index, I look at the equally weighted US dollar index, and there is a link on the top right hand side of the screen where you can put this on your trading view charts. And this is really understanding the dollar strength versus all of the other currencies that we trade, so the euro, the pound, the yen, the CAD, the Australian dollar, the New Zealand dollar, and the Swiss franc, but equally weighted. So unlike the DXY or the USDX, which has a weighted dollar index, they include, I think, the USDX or the DXY, maybe both of them. They don't weigh the currencies equally. Now, that could be a pro or a con, depending on how you use it. But I prefer, I think, the equally weighted index is a lot more accurate. And since I've been using it, I've found it to be I could make better decisions on where I should be buying and selling the dollar anyways. So last week we did have actually some decent data for the dollar, and in our summary analysis it says here that traders had nearly priced in 25 basis point cuts by the year end, and currently now there's actually 39 basis points worth of cuts and an 88% probability of a rate cut still. So it's still high, but we'll look for, of course, this week's data, which will confirm whether the market has been kind of is going to be offside with pricing in deeper cuts, or whether the less cuts are more justified. So it says here, but odds have shifted closer to just one or none after strong jobs and economic data, and that's what was came out on the Wednesday and the Thursday. So upcoming data focuses on the August PCE inflation, with any upside surprise likely to fuel further dollar strength and bond yield gains. And the reason why that is because as inflation starts to rise, it's harder, or it's not justified for a central bank to cut rates, because central banks will cut rates when inflation is falling to deflation, or there's a disinflationary move in the cycle, right? But if you have inflation sticky or maybe moving or rising, then in fact what central banks need to do is either hold or hike rates. And so PCE is a measure of inflation that the Fed use, as well as things like CPI and wage growth, but that's their preferred measure of inflation. If that starts to rise, then of course the market will then have to kind of reprice what they think the Fed will do with interest rates, which will be to kind of price out rate cuts, which will then strengthen the dollar. So, the focus is on PCE inflation, with any upside surprise likely to fuel further dollar strength and bond yield gains. And again, talk about bond yields. Remember I said at the beginning that bond yields actually will lead what the central bank is likely to do with interest rates. So they give a good indication. So if the dollar starts to strengthen, you'll see, if yields start to rise, it means that the bond market and bond traders are considering that there's going to be less cuts, which means a higher interest rate in the future, which then means a stronger dollar. So whenever you're trading the dollar or any currency really, it's always good to look at like the 2-year and the 10-year for confirmation. And 10-year yields, by the way, bond prices, bond yields, sorry. So volatility, actually, matter of fact, options markets, dollar risks reversal turned bullish across tenors with 1 year at 2 month high for those of you who look at options. So that's quite bullish for the dollar. Volatility, G10 FX volatility fell to a 14-month low, supporting US dollar, giving inverse correlation. Hedge funds less willing to fade the rally, waiting for quarter end flows, and stronger US data and reduced odds of Fed cuts support the greenback. Options and positioning show momentum still with the US dollar, especially if PCE comes in hot. Fed will likely pause on aggressive cuts, shifting back to data dependent stance. Upside risks to inflation via PCE are now central to policy direction. So yeah, again, the fundamentals will come into play. We are at these highs. Prices obviously broke through on the Wednesday. Yeah, the Wednesday with positive data. And I say positive data, but data more supporting less rate cuts. And so that's really what drive the markets. Technicals don't drive markets. It's really the underlying fundamental side of things. But we are at some highs now. So where we look at these highs, I would say a reversal in the dollar will be dependent upon the data this week, non-farm payrolls, inflation, PCE. And so let's see what happens if the data supports likely less rate cuts. Then of course you're likely to see the dollar move to the upside. If not, then you're likely to see the dollar move to the downside. So I've kind of changed my bias now to what is known as an auction or a range, although I do still have a little bit more of a sell bias because of the fact that there is still at the moment currently an 88% probability of a rate cut. If that starts to reduce, then I will have more of a neutral bias, meaning I will look to buy and sell the dollar based on the data. But for now, although we've had some decent news, it doesn't mean that the dollar is now all of a sudden a buy. You can have good news in a downtrend, you can have bad news in an uptrend, right? But it depends on overall whether the Fed are likely to continue cutting, or the market thinks that the Fed are likely to continue cutting aggressively or not, or reduce their cuts. And so with the dollar, I'm still looking for some shorts at the moment. I mean, even looking for a buy would be buying at highs, which you'd have to look for a pullback if you are looking to buy the dollar. So you wouldn't necessarily look to trade this. You can't really trade this equally weighted index, but what you would do is use this as confluence. So if you want to go short on any dollar pairs, then you know that of course the dollar is at an expensive area. If you want to be a buyer of the dollar, you don't want to buy the dollar on at highs, right? You want to buy the dollar really on a pullback before going long. And there are of course momentum strategies. If you trade that way and you're looking to buy at highs and sell at lows, then of course you can do that, right? But I'm looking to buy low, sell high, so buy at value. So if I'm looking to buy the dollar, then I would have to look for either a pullback down to that demand zone, or if prices make a higher high from here, so it goes higher, then I would look for a pullback into a newly created demand zone before looking at going long. So looking at the euro index, and the euro at the moment, again looking at this for the last year to date, we've just seen the euro as the dollar has gone to the downside. We've seen that from the beginning of the year. The euro tends to move inversely, not all the time, not 100% correlated, but it will typically move overall inversely to the dollar. And so again, I want to be a buyer of the euro at the moment, but for me, this is still way too expensive for my liking, although prices are pulling back a little bit. I would say a pullback really down into, let me just change this, sorry, to regular, down, maybe the 94 is a bit more fair value on this before looking at going long on the euro. Fundamentally, nothing's really changed for the euro over the past couple of weeks. Still got the same kind of analysis I've had for the last week or so, whereas Lagarde says disinflationary process over for the euro area. ECB leaves rates unchanged as expected. Lagarde says no risk to economic growth. More balance. Says disinflationary process now over for euro area. Traders pare back easing bets, and you can see that here. Current future central bank policy for the rest of 2025, there's really just about 2 basis points priced in, and 98% probability of a hold at the next upcoming meeting. And so traders pair back easing bets indicate rate cut cycle over. The ECB signaling the end of cuts while the Fed prepares to ease, creates relative yield support for the euro. And what that's saying really is that if the Fed are looking to cut rates, the euro are looking to hold rates. Cutting rates is a way for central banks to look to devalue their currency. Another, the euro, the ECB are not looking to devalue their currency, and so what you should have is euro dollar should move to the upside, right? Which it has been when you look at the daily and the weekly charts and over a longer time horizon. The ECB signaling, no, that's it. So market pricing suggests confidence in ECB stability. French political risk noted, although that has not been in the papers this week at all. But bond spreads and FX reaction remained contained. So there was some political risk, but really, I think the market has kind of looked past that for now. So the euro, for me, continues to be a buy. Just looking for really a bit more of a pullback before looking to buy the euro. The Japanese yen. Now I was saying to the guys in the group, and if you are in the private members group in the Discord channel, I have uploaded this week's videos to the trading videos channel, which you can access via the Discord group. And so I've got an in-depth weekend video, the 27th. Did that yesterday, recorded that for you guys yesterday, which includes much more in-depth analysis on all the pairs we're looking to trade, as well as the week's videos, as well as the live group call recording I have pretty much every Wednesday or Thursday. And I've got the Australian dollar long profit, which I'll get into in this video at the end, that trade there. But in the group analysis, I was saying I want to be long, or I'm looking for potential longs on the yen. But the problem with the yen is just that they've got an election on the 4th of October. So I do think that if the government that is elected is supportive of rate hikes, because the Bank of Japan do want to hike rates due to the data, but I won't necessarily read all of this, but it says here, for the BOJ, the policy path, the decision shows increasing confidence in normalization. Normalization is just really talking about rate hikes. Though global uncertainty and the LDP leadership election on October the 4th could delay an October hike. So if the government that gets in is, their fiscal policies are more, I guess, a bit of a hindrance to the Bank of Japan hiking rates, then of course there's going to be issues there. But if the government kind of government policies support a Bank of Japan rate hike, then of course I think the yen should be, at least in the very short term, a bit of a buy. So I'm waiting for certain things to happen around here first to confirm that I want to be a buyer, although we've hit this level once, twice, 3 times, 4 times already. I think we could go lower before we go higher, and that's always the danger, right? Traders think that the more times the level is touched, the stronger it becomes, and in fact it's really the opposite. It's the more times the level is touched, it could be the weaker it becomes. And that's not to say that prices can't reverse here, but I would rather wait until closer to the time, and maybe after the time, before looking to buy the yen. Of course, the risk to that is that the market could get ahead and start to price in a win, for example, for the government, and by the time I get in, it could be, the yen could be somewhere up here, right? The move might have moved, but I'm always trusting in pullbacks to some degree. So I'll just wait for a pullback if I do miss the initial move, and I'll wait for it to pull back before I get involved in a buy trade on the yen. But for now, I'm still just sitting on my hands. But I know some of the guys in the room may look to end up buying the yen to try and get ahead. Again, it's a bit of a riskier play, but with risk comes rewards. So if you are looking to get in before, then of course higher risk but higher reward. If you're looking to get in afterwards, then the risk reward may not be as great as if you got in before, but there's still a trade in there, because again, when you're looking at over the medium to long term, the bank will be, should be on a rate hiking cycle, which means that they're looking to support their currency going, into the next, maybe 6 to 10 months to 12 months, right? So ultimately, that's what I'm looking for on the yen. And with the pound fundamentals. It says here options markets turning bearish on the pound. Nearly 80% of euro pound options expiring in November are skewed towards sterling losses, with bearish bets stretching into 2025, 2026. UK fiscal risks in focus, and that's really my worry as well, which is the reason why I'm more have a short bias rather than a long bias. Even though from a long, if you are looking to buy the pound, it does look like the Bank of England are pretty, they're not looking to cut rates at all. Again, you can see 6 basis points priced in for the rest of the year and 92% probability of a hold, which should be supportive, but the uncertainty around the fiscal risks, the budget in November is what the market is really kind of focused on, and the uncertainty around that. So it says that the fiscal budget, Chancellor Rachel Reeves' November 26th budget is expected to include up to 35 billion in tax hikes, pension property income to close the fiscal gap. This is weighing heavily on sentiment. Weak trade data, UK export demand fell at the fastest pace since April, adding to downside pressure. Pound has fallen to its weakest since late July and is on track for its 4th consecutive monthly decline versus the euro, its worst streak in 7 years. ECB versus the Bank of England dynamics. Traders believe the ECB is done cutting rates, while the UK fiscal concerns overshadow any hawkish repricing of Bank of England policy. Options positioning, heavy clustering of bearish strikes between 0.875 and 0.890 on the euro pound pair, with some targeting moves above the 90. Risk reversals show the most negative year-end sentiment for sterling since April. For the pound, clearly bearish. Fiscal tightening, higher taxes, risks dampening growth, and that's really the crux of the issue with the budget. Weak external demand undermines trade and investment. Heavy option skews suggest markets are positioned for further depreciation into November. So that's really where I am, and I'm in good company when it comes to the options traders, right? So for me, looking at the pound index, any pullbacks on the pound, if you missed out on the short here, then I do think that any pullbacks on the pound are going to be really nice for probably maybe a last chance, or one of the last chances you can get to probably go short as we head into October to November, right? So any pullbacks on that pound, I think, should be shorting opportunities, of course, unless data supports otherwise. The budget could be fantastic for the economy, but I don't think so. I think the bond market earlier in September, I think it was the beginning of September, really was a warning shot for the government to really kind of get this right. And so if the government don't, then I do think that prices should move to the downside, and the pound should move to the downside. And I don't really have any faith in our current government anyway in the UK. So that's where I am with the pound. So ultimately, the dollar can be a buy or a sell depending on the data. I'm still leaning towards a sell at the moment. Technically, it's setting up for a sell, but again, just going to wait for a few more things before making my final decision. The euro still a buy on. Just waiting for a pullback on the euro. The yen, I think, should be a potential buy, but again, just waiting for the election results. Although I could get involved probably before that, may take a little bit of a gamble, maybe on the weekend or just before, maybe on the Friday, and see what happens there. But the safest play would be to wait for Monday open and see what happens. I am leaning towards the upside, but again, that depends on who gets into power. And the pound, no matter what happens, I am a seller for the on the pound at the moment, because again, I think with negative sentiment around what the government is doing at the moment fiscally, I think the pound should want to sell off more than probably some of the other major currencies. So when it comes to choosing pairs now, it should be a lot easier to decide which pair you want to look to trade, right? So if you're Looking at the euro dollar, I think the euro dollar is a bit of a tricky side, because again, just although I want to be a buyer of the euro, is it best to buy it against the dollar, which is strengthening at the moment because of good news? But so it's, again, we're going to have to probably wait, or I'm going to have to wait until this week. And if the data kind of does support continued rate cuts by the Federal Reserve, then I think this trend should continue to the upside, right? So we've been really, since the beginning of the year, euro dollar has jumped from 102 to bloody hell 119. So yeah, then there's calls for 120 by the end of this year. So we could see that, but that'd be driven by data. So whether it reverses now, again, I'll probably waiting closer to the non-farm payrolls to maybe try to enter just before and see what happens there. But of course, if I'm wrong about the data and the dollar does strengthen, then I'll just exit the trade. The dollar yen, and again, the dollar strengthening this week. I think this level is actually quite nice for a sell technically, but again, it really depends upon what happens this week with the dollar. You do have actually some demand zones here. So if there is positive data out of the US this week, then you're looking for a buy probably around here. Or if you're looking for sells, you can probably look for sells now. But again, for me, I'm looking for sells more a bit later on in the week. And let's see what happens there. Pound dollar. Again, last week I was saying that there could potentially be a bit more of a pullback. Not really trading this pair because I'm not really a buyer of the pound. But if you are looking to buy the dollar against the pound and short the pound dollar, then and that would have to be confirmed by data this week, say good non-farm payrolls. If you do ever get a pullback into that area, then I think actually that's going to be a nice short trade. But buying the pound at the moment, I'm not a fan of. The euro pound, again, as we've read in the pound analysis, the euro really does have the edge against the pound, and the euro has the edge against probably most of the currencies. So at the moment, just waiting for a pullback into a demand zone before looking at going long. I do like this trade and this pair so far. And euro yen, again, euro yen I think is really dependent upon the government elections. So we are at these highs. This was 2024, July 2024 highs, nice hard in, hard out movement. So this area is definitely going to be watched. Now, if the Bank of Japan do start to look like they're hiking rates, I think we could probably get a pullback to some degree. But if I'm looking to buy the yen, it wouldn't necessarily be against the euro. It'd be against a weaker currency, and I'd probably choose like the pound dollar, for example, and that would be my preferred choice. So technically there are reasons to sell and there are reasons to buy, but I'm not really looking to trade this pair because I do think that both currencies would end up being looking to appreciate, and trades pairs are harder to trade when both currencies are strong or weak. It's harder to pick the direction of where the currency should go and the exchange rate should go. Whereas, for example, with the pound yen, I think if the yen starts to strengthen and fiscal policies in Japan are supportive of rate hikes, any pullbacks should be probably short in opportunity. So any pullbacks this week, again, always a bit of a gamble. We are gambling, as much as people don't like to say the word, right? We're traders, right? We're more sophisticated, but at the end of the day, if it's not certain, it's a gamble. So it is a riskier trade if I look to take a trade before the election. But again, the risk reward could be nice. Of course, it might not get up there, could just start to fall straight away. Who knows? I don't know. But if it does come up here, then, so as an if-then scenario, then I'll look for a trade to the downside as well. So that's what I'm gonna potentially look to scale in, or maybe like a small position and see what happens. But that's really where the forex pairs are in terms of the metals. Gold, just making, of course, higher highs this week. It just reached the 3790 area, 3,790, and so I think with dollar strength, if the dollar does strengthen, and this is one of the rare occasions where actually gold has strengthened this week, as well as the dollar, right? Well, actually, I say this week, but really, it's really the last couple of days. So you've seen gold strengthen, but you've also seen the dollar strengthen since Wednesday as well. So they don't always move they're not always 100% correlated, but if the dollar continues to strengthen based on non-farms and inflation data, then you're probably likely to see gold start to sell off. So you can express, in fact, a trade if you wanted to look into sell gold. If you're looking to, if you're looking to buy the dollar and you don't want to buy the dollar against other currencies, if there's no setups, you can look to trade here. But again, just be mindful that you are trading into thin air. These are all-time highs, so you have nothing to kind of look towards in terms of reference, no historical supply zones or resistance areas. So you'd be shorting into nothing, but it'll be purely based on really just a news trade. Same thing with silver, grinding higher. And yeah, basically, if you are looking for shorts, it would have to be triggered really from a fundamental perspective, rather than a technical, any kind of technical analysis perspective on this. And the S&P, so the S&P did pull back this week into a demand zone, and it's bounced from here. Now with the S&P may start to fall a bit and pull back a bit based on, again, US data this week. And it's really because the stock market will typically tend to rally in a rate cutting cycle. So if there's less rate cuts coming and maybe more of a rate hold, then I think there should be a decent pullback on the S&P. But so far from these highs, we've only really pulled back 2%. Personally, I'm looking for at least, something like a 5%, 4 to 5% pullback before I look to get involved in this. I need a decent pullback where there's potential upside to make some money on this. So although, yeah, day traders are looking to probably, buy here, I think if the the data is supports, I guess, rate holds or less rate cuts from the Fed, then I think the S&P should likely move to the downside. And I guess you could look to actually even short the S&P. So if we do pull back a little bit, maybe back up to these highs here, right? Because this actually now is a supply zone there. And then you can look for a sell trade if prices pull back up by Thursday, Friday. And then good news for the dollar, potentially a sell. And I say it's not necessarily good or bad, it's just news that supports rate hikes or doesn't support rate cuts, or doesn't support rate cuts, right? So if it doesn't support rate cuts, then you're likely to see it sell off. If the data supports rate cuts, then you're likely to see the stock market continue to grind higher. So that brings us to the trades. So I didn't take any trades last week, any new trades. I should say, or the week before, but I did take a trade on the Aussie dollar. I was talking about it in last week's video, and managed to be a profitable trade. A 1-1, lost one, but because I increased my position size when prices go against me, I can have a 50% win rate and be profitable, right? So yeah, so this was really the trade setup on the daily. So we had a daily demand zone here that I was interested in. At the time when I entered on Monday, the dollar was the weaker out of the two. The Australian dollar is and still is really, I think, a currency that is one of my buys. And so going down to the lower time frame trade or lower time frames, my entry was here and my stop loss was 15 pips below the swing low. And what I typically tend to do is end up going setting a buy pending order here and a buy pending order here, and increasing my position size. So for example, if this is 1%, right, then this would be 2% and that'd be 3%, right? So as prices went to the downside, managed to get in on this position here, which is double this position. And so this position, when it triggered here, ended up hitting a nice 1-to-1 right there as prices moved to the upside. So ended up making double this position size. And then what I do is once I hit profit on a 1-to-1, I cancel this position, right? So I take my risk out of the market. So then I only had one position size left, which was the original one, which was here. Didn't manage to trail my stop up as it goes, which I kind of should have, but then ended up losing that trade there. So one win, one loss, but ended up being a profitable trade on this pair. For now, I think there is the potential to look to again buy this somewhere in this the daily demand zone, but it will depend upon what happens with the dollar this week. So yeah, profitable trade, profitable week, and let's see what happens with that. But no new trades again. I think I'm just really waiting for the dollar and the yen really to kind of for that data to kind of come out and see where I want to kind of be a long, whether I want to be long or short on those pairs. So that brings us to the end of the video, and hope you found the analysis useful, and I'll speak to you all next week. Take care and all the best.